Hello everyone, welcome to today's Chartist Corner strategy session here at FX Street. My name is Fan Yang. I'm the Chief Technical Strategist at FXTimes.com. And twice a month I will be on FX Street talking about the technical setups that we are seeing. Most of these are my charts that I'm looking at, so mainly the majors. We can take a look at some other charts as well as we get through this session. So let me read off a disclaimer before I start. Informations and opinions contained in this webinar are for educational purposes only and do not constitute trading recommendations. Forex trading involves a substantial risk of loss and may not be suitable for all investors. Okay, so let me share the screen now. Alright, you guys should see the Euro-Dollar 1 hour chart, which I am assuming a lot of you are focusing on this morning in the US session, right? We had a break here below 1.4450. The market was testing that in the beginning of the session, and then in the last couple of hours, we had a very sharp slide, breaking through 1.4450, breaking through 1.44, which was an important pivot. Okay, some further bearish signs here. The RSI broke below 40, so that killed the bullish momentum. As you've seen here, when the RSI maintained above 40, that reflected a continuation of that bullish momentum, but now it's breaking back below 40, breaking back even below 30. That shows you a significant correction. That shows you that the market has momentum for a significant correction against the rally that we had in July. Now this July rally, if you move back here, has been in 1, 2, 3. This is the third wave up. So if I'm in the anticipation that the euro has started a bullish wave, we should respect this 1.4280 pivot here coming down. Okay, so this is the most aggressive target right now for my bearish outlook in the euro dollar in the short term. And this is a signal, this breakthrough and the RSI breaking below 30 are signals that the market is heading towards there. But also in the very near term, this is also a oversold signal. I used it as a bearish breakout signal. But it's also, conventionally, it is used when the market is ranging. It's used as an oversold signal. But the market is trending upwards. So this right now is maybe in the near term a signal that the market's a little extended in the near term. But it is a signal for bearish outlook in the short term. So I'm looking at this 1.3450 level here. It's a psychological pivot, and it's also basically near the bottom of this consolidation. And we could see some kind of, and 1.3440, 1.3438 is that 38.2% retracement level. What other support do you see here? You also see, let me just highlight it here, you also see a rising support trend line. So a cluster of support here at 1.4350 area. Okay, but this market should, but if it extends more aggressively, the next cluster of support is here. Okay, 200 moving average, 50% retracement, and this previous resistance, and this resistance here. Let's see if the market treats this as support, and that would be a very strong confirmation for the bullish outlook. Okay, so short term we're looking at this bearish outlook. In the medium term and the long term, if we move up the time frame now, we are currently in the 1 hour time frame. Let's go to the 4 hour time frame. Okay, in the 4 hour time frame, first of all, if I zoom out a little bit, you see the market break above a projected trend line here, and now the market's falling back below it. So the break here is called a naked break when it doesn't have confirmation, and when the market comes back, it has a chance to confirm that break. Okay, and when you look at this market, it's been wavering above and below the 200 moving average. Okay, now if it stays above the 200 moving average, despite a little crack, when I talk about these levels, always give it some elbow space. So even if the market cracks this 200 moving average, if we still have support for this market and we don't have this type of ranging action, then we are really confirming the bullish outlook. For now, in this 4-hour chart, the momentum is not there for the bullish outlook. The RSI hasn't broken back above 70, and it's still sort of, getting lower and lower here. It was lower than the previous attempt here. So the momentum is not there. The market still has one more confirmation for this bullish outlook towards our pivots here, 1.4696 and 1.4940. All right, so that's the euro dollar. It looks bullish with this break, but to me it's still one more clue from confirming this bullish stance. Okay. All right, so that's the euro dollar. 4-hour chart, let's move up to the daily chart. Okay, daily chart, the same projected trend line. You see the market breaking it, but not really confirming it just yet. Here, you also want to see the RSI break above 60. If the market breaks above 60, that shows maintenance of the bullish momentum we established earlier, because it failed to sustain a break below 40. Now, the RSI, if it breaks below 40, stays below 40, that kills the bullish momentum. We did flatten it out. We did crack the 40 level, but if it now returns back above 60, it reflects a bullish continuation. Okay, and the market looks like it is breaking out of this consolidation pattern. All right, so that's the euro dollar, waiting for this dip to give us a confirmation on a continuation rally. Okay, I guess let me just do one more look. So we see this breakout from a consolidation pattern in the daily chart. I just want to go to the monthly chart here. I don't know how many of you look at the monthly charts. If you're an intraday trader, this probably feels like eons to you. Going all the way back, you see here the data goes back to 1989. But what we're focused on here is the data here after 2007. The plunge here, the global recession. I believe there was some the debt crisis started here. We had maybe the first Greek debt crisis and the Irish debt crisis here, right? So all this is the debt crisis, pushing it down, right? But at the same time, we still have that bullish, ECB to Fed interest rate expectation, meaning the ECB is still expected to raise rates earlier than the Fed. So we still have that. That's the major theme for forex in the long term. So we still have this bullish stance even in the long term for the euro dollar and the monthly chart, and just like analogous to the daily chart, we have this RSI pushing on 60, wanting to resume the bullish mode. All right, so that's just some perspective, bullish perspective for the euro dollar against the current short-term bearish correction. Okay, let's move on to the pound dollar. 1-hour chart, we see a similar dynamics in the pound dollar, mainly because in this medium term, if we're not talking about the Eurozone debt crisis, we're talking about the US debt crisis. So the US dollar across the board has been giving up its risk aversion gains. It usually gains in risk averse environment, but in July we saw, as we near the August 2nd deadline, we see the market getting more and more tentative, more and more, where is this deal? Where is this deal in White House, in Washington? It's not coming, and the longer it drags out, the more the more pessimism the market has regarding that issue. So the dollar is losing, and in the pound dollar we see that. Let me actually move up to the 4-hour chart and actually the daily chart just to show a consolidation pattern or correction pattern breakout here we had last week, or on July 21st. Okay, and now the market is confirming that. Okay, so as far as bullish continuation goes, the pound dollar is ahead of the game relative to the euro dollar. Okay, there isn't really a UK debt crisis, although, and they didn't mention QE2 in the last minutes, right? Bank of England meeting minutes. So pound here reflects a little more of that bullish continuation. You see in the RSI too in the daily pushing above 60. Okay, so just a step ahead of euro dollar, and we see that these are the next targets here. 1.6546 pivot here, 1.6745 pivot here. Okay. All right, so let me go back down a little bit to the 4-hour chart. Okay, so we completed when we broke above this trend line, this pattern resistance. Okay, we had this projection, right? And the market has broken that, or has reached that, cracked it, and now is consolidating. It's coming back towards this consolidation area. Okay, and it's testing this rising support. So in the short term, there's a hurdle to cross before some further bearish outlook, say back towards 1 point. So let's say we break it, we get a pullback, and then bearish continuation. We have the 1.62 level, 1.6195, this pivot here as support. Okay, so that's the short-term outlook for the pound dollar. The correction towards 1.62, pending the break below 1.6330 area. Okay, and pending, we don't want to be in a bear trap. So if the market after this break rallies, and then it's a weak rally, maybe 50% retracement of this. That's, I don't want to see it break above 61.8%, or it could be a bullish continuation. If it stays under 50%, let's say a 38.2% correction, maybe still respecting these tops here, and then fall back lower, I would look for the market to go towards the 1.62 level. Okay. All right, so that's the pound dollar in the short term, bearish against a medium term bullish outlook towards these pivots up here. Okay, so let's move on. Nice and quick. Oh, okay, so euro pound. Let's go to the 4-hour chart. Okay, this is a classic technical bearish continuation type of signal here. Let's start from here. The break of the channel, the break below 200 moving average in a 5-wave pattern. Okay. The market pushed the RSI below 30, so that's a bearish signal. But again, in the near term, that could be a sign of oversold conditions. So here, as the market, pushed one more leg down toward wave 5 here, we had a bullish divergence, and then the market rallied in the channel, the choppy one, came up here, 200 moving average. Okay, it broke this pivot. This was important, 0.8845. But when you see this break and you see the 200 moving average here, this is what you want. You want the market to break it and then come down and see if it could confirm the break, and it couldn't. Instead of confirming, we had a lower high, and then now we have a break below this consolidation correction pattern support. The RSI reading stayed below 60, and now is threatening to break below 40, which maintains the bearish momentum we had in this decline. And if the RSI pushes below 30, we are likely reflecting a bearish continuation. Okay, so the euro pound here looking very bearish after being rejected here from 0.8845, albeit cracking it at first. Okay, so now the price action suggests we should come down to test these lows here. Okay, some shared low here. If I take out this tail and look at some more common lows here, it'll be 30 area, the low down here near 0.87 flat, 0.8704. Okay, so that area is your near-term target at the moment. Okay. What happens sometimes is that we get this bearish move, but the market's not ready to continue and continues to consolidate, okay, for another corrective pattern just like this one. Or, it doesn't have to be just like this one. This, let's say this is a 1, 2, 3, 4, 5, 6, 7 wave correction, okay. We could get another type of, we could get a zigzag, we could get a triangle. Basically another correction could be looming if the market doesn't break below 0.87. So this is the short-term target around these lows here, but only a break below 0.87 opens up the bearish continuation. Now, if you look at this whole situation, you have to decide, do I already have enough evidence? Conventionally, yes, we want to make sure this is not a bear trap. Okay? But you always, when you're trading, you don't always, yes, the mantra is always stick with your rules. But rules have exceptions, and if you can develop specific scenarios where those rules have exceptions, then you can apply that as well. So if this is one of the exceptions, this would be my exception, that we have enough bearish clues here that I wouldn't be as afraid of a bear trap here. I would be more inclined to be more aggressive here for the bearish continuation. Okay, let's see what our targets below that. See, that's only in the short term, because if we look at the euro pound in the daily chart, the market is in a slight bullish tilt, even though it's very choppy. And the market has stayed above the 200 moving average so far. Okay, here the 200 moving average is flattening out, but we have very bearish price action. So again, you're juggling two different signals: of long-term signal, long-term signal, or maybe a better word would be a long-term scenario that the market is bullish, and the more short-term and medium-term scenario that the market is bearish. And therefore, we could have some, we're very confident on the bearish outlook, but the aggression of this bearish outlook is limited. And we have a first target here, a very short-term target here at 0.8666. This pivot and the 200 moving average just around your 50% retracement level. Okay, so that's not even that far from our recent low here. Okay, below that we could be testing 61.8% retracement, rising pattern support here, and at that point we're still in a bullish stance. Okay, but if you're a little more aggressive, this is a viable target here near 0.86. Okay. All right, so that's the euro pound. Again, short-term, medium-term bearish against a long-term, slightly bullish market. So don't be too aggressive on this bearish outlook. Okay, so let's move on to the daily chart of, the dollar yen. And here we have the daily chart. Okay, so we reached 77.95, 78 area, which is the 78.6% retracement. By the way, if you have any questions or any opinions or whatnot, feel free to type it in the chat. My eyes are always going back and forth, although I might not answer you until I finish whatever I'm looking at. So here's the dollar yen. We have a throwover breaking below this projected support. The market is looking towards these record lows here near 96. Okay, RSI breaking below 30 shows you bearish momentum, but really it's ranging. So this is at this oversold level right now. So dollar yen oversold, bottom line, and a little more. Every day we inch a little lower. We get more and more quote unquote rumor of intervention by the Japanese finance ministry, right, or minister of finance, right? So that is one risk event, one against going short here towards the record low. But at the same time, we don't have any fuel to go long. Okay, so dollar yen, in my opinion, is to be honest, I really don't have any idea what's going to happen to the dollar yen. Maybe I'll get some more clues after next week, after the August 2nd deadline, and then see how the market digests the whatever Washington comes up with. Okay, so dollar yen. Let's see, maybe lower time frame. We can get some clues. In this 1 hour time frame, we do have a very sharp reversal here. Okay, stronger than most of these recent attempts. Okay, but you see, I'm scared of these tails, right? It shows you that whenever the market is pushing up, it's very vulnerable to being rejected. Okay, we need more of these to build strength. We need more of these tails to the bottom to show us strength. Here we just had wild volatility, then we had narrow volatility, expansion, and then break below. Broke below this pivot, and now we're heading back towards it. And you see here 200 moving average as well. So this is all noise to me until we break above the 200 moving average, stay above it. We have a lot of work to do for the dollar yen to build strength, I think. Okay, if you're trying to catch a bottom, be prepared for these kind of rejections. Okay, so if you try to catch a bottom here, I would be very quick on the exit. Here the RSI pushing above 60, so it shows you maybe the short-term bearish momentum is being threatened, and we could have a short-term correction. Okay, so what kind of correction could we have? Let's project some of these, connect some of these resistance levels, and you see we are also breaking above that resistance line or trend line. So I would say, yeah, a correction back to 78.50 is not unimaginable. But beyond that, I would be very I would refrain from my outlook, bullish outlook beyond 78.50 at the moment. Okay, so that's the dollar yen. Okay, so let's go to right now we are seeing risk aversion, but the dollar here is gaining against the yen. But let's look at the Swizzy. Here's the dollar Swizzy. Also bottoming a little bit here. We have a bullish divergence. RSI cracking 60. Market flattening out. Okay. Let's see. This is consolidation. After the consolidation, we had a break. And now we are in a correction. Let's see how far the correction could go when we map out our Fibonacci retracement levels, and we see, I'm sorry, I'm just looking for the highlight here. We see a pivot here, this pivot here, and 200 moving average, and 61.8% retracement near 0.8150, but our resistance could be a little lower than that. You see here a little minor consolidation area as well. So look for some resistance when the market gets close to that 0.81, let's see, 0.8130 area. Start looking. If you are picking this bottom, start looking for an exit there. That would be my personal opinion at the moment. Okay. So dollar Swizzy in the short term looks like it can get a little bit of support, but again, let's examine this bottom. It hasn't actually. We're a little premature in calling it a bottom at the moment. What prompts me to say that is the price action here, a little stronger than our recent price action here, but not very impressive at all. Okay, this bottom action could actually take a long time. Okay, so you could have this bull trap and then further consolidation before a more significant correction. So dollar Swiss, just like dollar yen, I'm not messing with the bullish outlook yet. Let's look at the bearish outlook. So and you could see why when you look at the daily chart, why it wouldn't be prudent to look for any significant bullish attempts just yet. RSI continues to be maintained below 60, even below 50, and very near 30. Okay, we are stuck in this bearish pattern here, a wedge coming down. Okay, our target at the moment can extend towards point 7850 using this swing projection. Near term point 7967 using a range breakout projection. So this is your bearish outlook right now, or bearish target right now, point 7850. Okay, there I might look for a little bit of a correction back towards this low here, point 81 area, maybe a little bit below that. Okay, so dollar Swizzy showing some short-term bottoming attempt, but I'm suspicious of it until it can actually break above point 8150. Alright, let's see, let's move on. Lots of important price action to talk about. Next one is the Aussie dollar. Okay, so I don't know how many of you remember, I was looking at this Aussie dollar as here you had a correction, right? And then here, this is right now in the air, either 1, 2, 3, 4, 5 going up in a bullish continuation, or so after this consolidation we have ABC as a connector wave, and then seeing it break above 1.1010, it would be an expanded flat. If this is just a clear out and the market can sustain the break above 1.1010, falling back, it would be I would anticipate a 5 wave down towards 1.0440, especially if the market can clear back below 1.0790, 1.0785. Okay. So we had our very strong breakout here, and now the market is back to consolidation. In my opinion, if it doesn't show consolidation, it needs to push up above 1.1010. In the next few hours, it needs to close above that. So closing the U.S. session, we need to break above that. And even then, this break is not very strong right now. I would look for that throwback for further clue. And if that throwback cracks 1.0785, I'm looking for it to go back down to 1.0440. Okay. Now, we do have some bullish targets here. You see breakout from this range is 1.1590. Projection from here, swing projection 1.1690. These are a little bit longer term. I'll probably be back here next time before we get there, unless we have a major dollar fallout. Okay, so this is really just a time of uncertainty. Rarely, I guess, when you look at all this risk on, risk off in the markets and all these risk events, you kind of you feel dull. Like, oh, okay, big deal, what GDP is bigger, higher than expected. Markets putting on strength, or whatever. But here we have some major risk event next week, so it's really sort of exciting at the same time, sort of unnerving. Okay, so that's the Aussie dollar with those two scenarios. I'm checking out right now. What can let's see, 4-hour chart. Okay, here's the 4-hour chart with the bullish idea, because I'm looking at this count and the market is becoming very strong. in the lower time frame. So the internal structure of this rally, when I said the break wasn't impressive, that's looking at it from a daily perspective. Looking at the 4-hour perspective, looking at the internals, it does look very bullish. But if the market breaks below 1.876, I'm gonna get back to that anticipation of a flat and therefore a short-term bearish outlook, medium-term bearish outlook towards 1.0440. So breaking this, to me, invalidates my bullish outlook. Okay, and then further break below 1.0785 will give me signal towards 1.0440. Okay, here we might get some noise. I would be standing by. Alright, so if the market comes back down, fails to crack 1.0875 and rallies from there, then the bullish outlook is the preferred one. Okay, so let's move on. All right, we still have a lot of time, so we get through a lot of these pairs. Gold. Okay, so let's look at gold. Extended divergence in the 4-hour chart. The market here, to me, 1, 2, 3, 4, and then 1, 2, 3, 4, 5 to complete 5. So, where's Uday? Okay, he's not here right now, but yes, a student of mine picked it up. This is a 5-wave rally, and the last 5-wave rally has ended as well. So there's a correction, technical correction here, anticipated. First, we are testing this pivot here, though, 1607 area. You see these lows here, but with such a heavy candle, we can expect the break. Okay, let's draw this new trend line. You see a break below that opens up some further bearish targets in the short term. Okay, let's I would say the maximum target at the moment is down towards the 1576 level, which was your record high until July, until we broke above it in July. So that would be your that would be my most aggressive bearish target at the moment. There's still a lot of uncertainty. One scenario where you get a strong throwback or a reversal in gold is the global markets really letting out a sigh of relief after this debt ceiling crisis and after the U.S. budget. Basically they're probably looking at Moody's and looking at these rating agencies. It doesn't matter what the Obama says directly. We might get some noise, but it's going to be up to whether Moody's, S&P, whether they lift that warning against the downgrade. Once you have that, then there should be that relief, and maybe then gold will see a more gravitated decline and break below 1576. But for now, 1576 is an important support, so that would be the most aggressive target for the bearish correction, and that requires a break below our support here. Let's give it some elbow space and say 1600. Psychologically, whole number 1600 should be our support at the moment. Okay, then 1576. Okay, let me move on. Okay, so Berna, yes, I will look at Euro Aussie and Euro Yen. Let me just since I was talking about gold here, let me just look at silver as well. Okay. Do we see the same thing in silver? As far as structure, I do. 1, 2, 3. We had an extended 3 here. 4. And then this 5th wave is a... Let me get rid of this. This 5th wave, you see that the lines that I drew before was for anticipation of this wave to come down here, but it should respect this level. wait, 1, 2, 3, 4, 5. Let me, actually, no. I was expecting, a three-wave correction. Okay, but nope, the market had this correction here in this swing and continued to go on its fifth wave up. And this looks like what's called a diagonal triangle. Okay, diagonal triangle with a failure here. The term failure as opposed to the term throw over. Throw over is you have this triangle, you have the market break through that, but eventually fall right back down. Here we have what's called a failure, so the market didn't even test that and is showing initial signs of the correction. Okay, so as far as correction from this type of pattern, a conventional target is the origin of this triangle, which is near 38.20. Okay, I would consider this entire area here, 38.20 down to 37.85 as support for silver. Okay, so look for a bounce. If the market continues further lower, we could look for the next target here, 36.76. Okay, gold is probably going to lead silver, or is going to be the main source of that or the main influence when you have safety demand, safety flow. It's probably going to push gold up and down first, and then you'll see the same similar reaction in silver. They're kind of correlated when you have this risk on, risk off type of trading, which we have risk aversion, so I don't. It's a little bit counterintuitive that silver and gold is in correction, but you do see that we are at the end of terminal waves, and that's a technical correction here. Okay, but risk aversion might prevent it from being a very significant correction. So monitor that risk appetite when you look at gold and silver. Okay, moving on. Okay, just before moving on, I'm sorry, just one more target projection method. Once the market finished this 5-wave rally, you could look for a 50% correction, and that's sort of the average of our two targets here, right? Okay, moving on to the euro yen. I'll look at the euro yen. I haven't had a chance to look at it today. Busy morning. But yeah, I could see. Okay, so what do you guys see here? This is a very classic pattern that's developing here. Okay, can I get a volunteer here? What do you guys see as a chart pattern here? Okay. A, B, C, D. Wow, okay, that wasn't the first I anticipated, but that's also a good observation, Floyd. Okay, so ABCD pattern, harmonic retracement pattern, is one where you see this decline and you see a 3-wave rally where your first and third waves are equal in length. Here we missed it. We had to respect these pivots back here, 50% retracement. So it's not it's not a perfect ideal ABCD or Gartley, but the dynamics are the same. We had a 3-wave rally, and then, thank you, John, we had now a double top forming as the market is breaking below our rising trend line. So euro yen here, another clue that I always talk about. This is sort of like, I guess, my brand of technical analysis here. When the market is trending, I'm always looking at this, right? The RSI not breaking above 60 to give me confirmation of the bearish maintenance, of bearish momentum maintenance. And the RSI now pushing below 40. That should help you confirm the double top, killing any bullish attempt here. and we should be heading towards these lows. Again, whenever you see this break, I always have in back of my mind a possibility of a bear trap, which is you have a corrective pattern, then you have a connector, then another corrective pattern. Okay, and that would also be an ABC pattern. You have basically your first pattern here. ABC is your A, and then this ABC is your B, and then another ABC to complete your C. So that happens a lot, and you have to be aware of that possibility, okay, in order to be able to react quick if it does happen. But if you see this, respect the double top, we could go for the bearish outlook. Okay, so looking at the 4-hour chart, we see the medium, the short-term and medium, 1-hour chart, you see the short-term momentum now being bearish, the market breaking below 200 moving average. Okay, this is an old Fibonacci retracement, so let's update it here. Okay, so in the 1-hour chart, you see this bearish development. Let me point out where I would start to be more confident. A break back below 61.8% makes me a little more confident that this is not a bear trap. Okay, and if the market then respects these pivots here, ultimately, 112 should give you resistance. Okay, that's the support right now to form this head and shoulder. If it breaks up below 112, we have a head and shoulder. Actually, it's closer to 112.10, 112.05. Okay, but psychological number 112, we need to break that. Okay, so again, on a subsequent pullback, we don't even want the market to test that. If it does, be careful. But if it doesn't and it respects 111.60, 111.50, and then pushes back down, very confident of the bearish continuation in the short medium term. Looking at the daily chart, okay, so that means we have this bearish continuation. Let's look at a bearish projection as such. Okay, this projection, if the market breaks below this pivot here at 109.57, again, close to the psychological pivot, 109.50, so let's say 109.50 gets cleared, then we're looking at these lows here, 106.80 and even lower, these lows here, 106 area. The projection here is aggressive, going down towards 105.30, around these lows. Alright, so by that point, I would be looking for support. Okay, so that's the euro yen, bearish in the short medium term. In the longer term, we're more of consolidation, ranging mode. Now here's the daily chart to show you that the RSI has flattened and even tilts upwards. We're wavering back and forth the RSI, showing you consolidation. The RSI here, KISS 30, KISS 70, KISS 30 again. Before that, it's also, almost KISS 70, almost KISS 30. So consolidation is the mode in the long term. In this time frame of long term, I'm talking about back to 2010. Now we're in 2011, past the midpoint of the year. Here, we should find some support. Okay. Nearing the end where I want to open up for questions or, just shoot the breeze with you guys, share some opinions. But I had a request for Euro Aussie, which is not the chart I usually look at. So just let me, I'm going to have to start from scratch here. And Euro Aussie. So here, Euro Aussie, and then I'll get to the Kiwi dollar. Sure. Berna, okay, well, I'll do a quick one. I'll look at the daily chart right now, and the first observation I have is this market is now ranging, or actually this market has completed a correction, right? This is a little bit of a hindsight, so not very useful at the moment, except for collecting these scenarios in the back of your head, building a reflex mechanism every time you see this. So we have this ABCD pattern, right? And then we have this decline, a little bit choppier than I like, but you see the market now staying below 200 moving average. So it's saying bearish, even though the RSI didn't break below 30 yet, it stayed below 60. So it's bearish. So it would be consolidating with a bearish bias. Not looking at the RSI yet, but looking at the chart, you have the bearish bias. Looking at the RSI, when it's stuck between 40 and 60, it reflects consolidation. So now you also saw this kind of correction, after which we had a rally, but this rally failed to break these highs. So very bearish, coming back down towards 129 low. So Euro Aussie. Let's see what happens if we break that. Okay, if we break that, we can look at this as a measured move and go like that. Okay, another projection method, use the Fibonacci retracement. So this would be an extended retracement. Okay, and you see some more conservative targets here. Okay, so somewhere here, 150, 138.2. Okay, near the 1.25, just below the 1.25 level. Let's see where that is. Near 1.24. Okay. All right, so that's the Euro Aussie, and I have the Kiwi, and okay, so I have some requests here. Let me just quickly pop into the Euro Swizzy, actually, because I wrote an article earlier today looking at the bearish continuation. So Euro Swizzy, if you just look at this Euro Swizzy 1 hour chart, it has to remind you of other Euro crosses, right? RSI failed to break above 60, coming down, breaking recent consolidation. So I'm not going to go through all the analysis because it's similar, but the projection would be, let's see, a break below 1.1518 here, looks at 1.1405, but also a swing projection as such towards 1.13 area, basically. Okay. So that's the Euro Swizzy. Let's look at the Kiwi, which is very strong. Here's the daily chart. Throwovers, channel resistance, throwovers in the daily chart. RSI breaking above 70. Bullish continuation is the signal. Here's the 4 hour chart. We have almost reached this swing projection. Okay. But what we could say is, here is one wave up. There's two. This looks like a third wave. So here in this correction, I would look for support no lower than this. Or I would look for the target to go no lower than 0.85 at the moment. A break below that, for me, makes this bullish breakout suspicious, even though it's been a pretty impressive breakout. Okay, that would just show that strong bears are flooding back in. So for the bullish outlook, I'll look at this most recent wave, look at the Fibonacci retracement, and you see a more likely target to be the 50% here, near 0.8575, a little bit lower than 0.86. right? However, we still haven't made, if we zoom in, let's go to the 1 hour chart. Okay, so price action suggests, yes, we're going to top off a little bit. We have a bearish divergence, but be careful when you look at bearish divergence like this, you have to now see that it's already resolved. The market so this signal is already back, is already irrelevant almost. All right, so now the signal is whether the RSI can sustain a break below 40, touch 30 in this 1 hour chart, and that would open up some bearish momentum for a correction. Okay, first pivot that needs to be broken is this 0.8676, 0.8675. Break below that starts the topping process for a correction. Okay, so finally, I'm just going to go one more Aussie yen, and that will be it. Here, where do I have the Aussie yen? Okay, here we go. Where should we start? 1 hour chart? Okay, 1 hour chart. Let me, just looking at price action, we are above 200 moving average. Here we have a slingshot. The slingshot is when you break above the 200 moving average. You see here, it failed, break. Then it comes back down to test it, and it respects it. Note that when I say the market respects the 200 moving average, I say it despite the fact that the market did break it. Okay, so, sometimes I get picked on like, oh, that level, it broke, look. But I want to be clear that, when I talk about levels and these resistance, projected resistance levels, it's, you give it some elbow space. And the second time around here, the market really rejected it even quicker with a push to the opposite side even stronger. Then the market continued higher. So Aussie yen looks bullish in the short term, especially with the RSI pushing above 70. Okay? Wow, okay. Vicky telling me to wrap up now. So here is the 4 hour chart. Okay, so you see we are at the 61.8% of this decline. Okay, so there is still that bearish stance, but it's, the momentum is broken and now it's at most ranging. So let's look at this 86.34.35 pivot as the next resistance. A break above that opens it up for 87.70. All right, so that would be your bullish outlook for the Aussie yen towards 87.70. Here's the daily chart. Okay, so let's be a little conservative. 87.70, 87.50 is your resistance zone here. Okay. All right, so that's it for today. Thank you guys for your, for your suggestions of, we did fill up the hour. And if you have any questions, I'll be here for a few more minutes. Make sure to check me out. Follow me on FX Times for my daily updates and Nick's daily fundamental updates as well. We also run our Chartist Corner there weekly, me and Nick, on Tuesdays. So if you don't have any Forex FX Street events on Tuesday at 3 p.m. Eastern Time, come through. You guys are all welcome to discuss the markets with us. All right, that's it for today. Thank you guys. Thank you, Diego, Berna, Aaron, Tony, Floyd, Vicky, everyone, Sue. Good to have been here and to have your company. Okay, bye-bye.